Good morning, Stocktwits Nation. It's Wednesday, August 6th. This is the Daily Rip Live. I'm Katy Perry here with Shay Boloor, and Stocktwits Editor-in-Chief Tom Bruni is back. I always chuckle when I see that opening intro that we have there because I notice new randos, like some random people just pop in. Do you know who those people are, Tom? Are they employed by Stocktwits?
I have no idea who they are. Our clothes change every time. We're
I
doing something crazy every time. So that's the excitement of joining. I get to see what crazy thing my character's doing
I
this
don't
time.
know. For me, it's the shy hush motion into the hair flip. I think that just really
Yeah, I mean,
encapsulates you as a person, Shy.
how do they know?
I know.
That's what I do every day. I'm just so violated.
It's gonna be you at the wedding on the dance floor, just doing flipping it up. Well, we have a lot of headlines and earnings results for you guys today. As you know, we're deep into that. Yesterday we had a good show. We went over Palantir and some of the other readouts we were getting. Today we got a bunch more. So let's dive right into that. And I know Tom also has great insights from data he's seeing in the StockTwits community. We know you guys like to see the sentiment and the activity among your peers in the retail investor community. So we'll bring that in as well. Let's dive right in though with Oscar. Shy, Oscar, we've talked about. You have experience in this industry. You've said before it's a hard industry to crack. Oscar missed expectations this morning, larger than expected. 89 cents per share loss, lighter revenue, despite they were raising their full year guidance. So investors are cautious after a bumpy 12 months. But Shy, I know you had some takes on Oscar. Thoughts on what you heard from those guys?
So I didn't get a chance to listen to their CC this morning, but I think Oscar pre-announced their earnings a couple weeks ago, maybe even just last week. So I think that nothing today should come of surprise. It's something their issue isn't operational. And what I mean by that is the government is essentially telling them you can keep doing the same kind of business you're doing. We're just going to not give you as much money. That's essentially what is happening with Oscar. And it's also what's happening with United Health Care as well, where it's something in the V28 movement. I won't get into it too much, but just end of the day, they're doing the same work for less money, and we'll see how that's changes next year. It's called MLR, by the way, if you guys want to look it up. Medical loss ratio, I think it is
Mm,
91%. The higher the number, the worse the revenue that you're gonna get. I think MLR is at 91%. Last year was at 78%. So you see that delta is pretty big. So you kind of have to write it out. It can look really undervalued right now. To be honest, it really is undervalued right now, but there is a red tape bureaucracy risk associated with owning these kind of insurance companies. But if you're a long-term investor, multi-year out, I do think this is a really interesting entry point because their growth is still really strong. It's just their margins are getting impacted due to um, Uncle Sam saying, no, 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 not giving you as much anymore. So I think that if you are a long-term investor, this is interesting because they are truly trying to build the stripe of healthcare where going from the ER to urgent care, emergency room, trying to make it actually going to emergency. The ER versus the UR is a big deal. So I think that
mm.
if they can conquer that and become the unified platform for that, it's going to be a massive ad value. It's not just going to be a $3 billion company. You guys know how bloated healthcare spend is. Like this is going to be a massive, massive compounder, but that's going
Yep.
to take years.
Seems like one of those industries that's so ripe for disruption, but as you mentioned, Shy, just so much red tape. Of course, Oscar, one of the founders, is Joshua Kushner, which is Jared's little bro. So he hopefully has some friends in DC as he's navigating that red tape. Tom, I know you were citing some trends in healthcare over in the community, specifically some dumpster diving behavior. Shy brought up UNH. There's some others. What are you seeing in terms of investor activity within the sector overall?
Yeah, I think it's an important kind of time or relevant time for a lot of these healthcare stocks, specifically the managed care stocks and insurance ones. The ticker symbol for the broader group is IHF. I don't think I dropped the chart in here. Yeah, I did. Keith, if you could pull up IHF. This is something that I'm just kind of keeping an eye on as a technician. This sector has been kind of hit pretty hard for the last 6, 12, 18 months. And it's now down to a level where it makes sense to start looking for some value. So, from a momentum reading perspective, RSI on the weekly is most oversold it's been in over a decade. You've got prices kind of stabilizing at this form of resistance near 40, 41. And so this kind of ties into the theme of UNH, Humana, all of those names that have really been beaten down. If we could pull up UNH, I think this is an interesting one, both from a trader and an investor perspective. So if you're a trader, you're looking at, some of these moving averages. The gray one is the 20-day, the purple one is the 50-day, and the blue one is the 200-day. And you can see prices are very extended from all of these. And so you've got traders that are looking for kind of a short-term snapback move, the rubber band being too stretched in one direction. And then you've got investors who are looking at this saying it's down 60% in 4 months, well off its all-time highs. Yes, there's challenges to the business, but it's one of those where if you can hold your nose and wait it out 3, 5, 10 years, you'll probably be in pretty good shape. So I just thought it was interesting to see kind of both traders and investors being interested in a name like this, but for different reasons and different timeframes, obviously.
I also want to add, like, this is not meta 2022. I see this headline all the time. It's so exhausting, the laziness of a narrative, and people want to piggyback off something that happened in the past. Like, it's not that. It's a different industry.
Remind us what meta 2022 was, Shay.
I think that investors or shareholders were fed up with Zuck just dumping cash in Reality Labs and not caring about shareholder return and value. And clearly, Zuck got the picture, and he's like, "All right, fine. I'll focus on margin expansion." It's 7x since that moment. Wow. So I think that Meta, Meta can flip a switch, and all of a sudden, it's a margin expansion opportunity right away. Like I mentioned, insurances, doesn't matter what they do. They're essentially Uncle Sam of the government's telling them, "This is what we're providing to you. Take it. You have to take it." It's not democracy, it's a dictatorship in that space. Where for Meta, it's all not user error, but it's man-made essentially by Zuckerberg. Just can decide to change his priorities, and all of a sudden its shareholders are printing cash from the margin expansion opportunity, not dumping as much in Reality Labs, focusing on ROI on his investments. Like United Healthcare, like it's the world's largest insurance company. The earnings multiple is pretty cheap. However, I think you're going to see a lot of exhaustion from investors on like the lack of a V shape because of what the government's saying, and it's not any user error like Meta where they can just like flip a switch. Like that narrative is so false, and if you hear someone say that narrative, like I think you should probably look at what else they've said in the past and ignore it.
The comps are interesting because when you were talking, Tom, about investors' interest long term of a potential bounce back, and then trader, it reminded me. I wanted to ask you about if this is getting sort of embraced by kind of the meme stock crew, only because it kind of reminds me of, I don't know if you guys remember Hertz in 2020 when Hertz was about to go bankrupt or announce Chapter 11, and everyone was like, "Oh well, they'll pop back. It's Hertz." And people jumped on that. And I'm curious if there is that sort of sentiment, are retail investors rallying behind UNH? It does feel a little different. You have a GameStop struggling business and people have a nostalgic, good vibes around them, where versus UNH is a little bit of a different story. It's not as much of an emotional pick. But are you seeing that kind of activity from sort of the meme community?
Yeah, I don't think so. I think we're seeing an increase in activity, but it's different entirely. I wouldn't say United Health has the best kind of like brand perception, and like people don't love insurance companies like they love GameStop or Hertz or something. So I think that's a tougher sell. market cap is still 228 billion. So like it's tough to move this if you're retail specifically. This is really going to require institutions stepping in and saying, hey, this is cheap enough. We're going to take a shot. We're going to have a long-term holding period. But the way I see most people approaching it is, hey, we understand this isn't going to be a V bottom like Meta, but if there is a portion of my kind of beta exposure to the market, instead of owning the S&P, with 50% of my portfolio, maybe I'll own 45% of my portfolio in the S&P, and I'll add UNH as the remaining 5%. And every time I add money to my account when I get paid, I'll add 5% of that toward UNH. And so they're taking more of a dollar cost average approach and saying, I don't necessarily know when this is going to bottom, but I think this company's not going away. The business is the core business is solid, just a lot of headwinds in the short term. And once they can get through those, it shouldn't be at 251. Maybe it shouldn't be at 650 either, but there's a lot of kind of space in between those.
It is an interesting challenge for these companies specific to retail. I can't think of a ton of sectors or companies where people just have like a natural aversion to not like them. Like usually it's like a neutral, or they like it if it's a consumer product. It almost seems like the exercise for Oscar is just to not be hated. That's all they really need to do. But fascinating stuff out of UNH. That's of course been one of the bigger storylines of the year. Let's shift over to AMD and chips. AMD posting mixed results. They missed a little bit on earnings, but they beat on revenue. Gave a pretty strong Q3 outlook thanks to demand for its new AI chips. And this is all in the backdrop of the China export ban, which cost it $800 million in the quarter. Shay, I know you were watching this one in particular. Thoughts on AMD?
Yeah, we actually spoke to Lisa an hour before their earnings yesterday, and we communicated what we wanted to see and what we thought the market reaction was going to be, and it ended up playing out the way we thought it would be, because it was a mixed bag where we believe AMD is going to be part of the AI revolution. We believe they're going to be the Android to the iPhone. I'm talking about AMD to NVIDIA on the AI accelerator market. And the company beat on the revenue. They guided really well. They delivered record free cash flow. But the narrative feels partially suspended. And the reason I say that is the part of their business that's kind of firing on all cylinders, it's the Intel side of their business. It's the desktop CPUs. That's not what the market wants. The market is looking for AI data center. And we didn't get any kind of clarity or any specific call outs in that section of how inference is having an inflection point for their business. And we thought that if that's not communicated effectively, that's not being called out, the market won't react correctly, or and won't react the way you would want, because the stock has ran up into this print. Like it was running up saying that the inflection is right now, it's happening. And the challenge is that AMD's AI narrative is being priced like it's already won. And I think that the revenue split says otherwise. Like their CPUs, I mentioned their desktop CPUs, their gaming GPUs are really carrying the story right now for AMD. And the valuation is slightly a premium to NVIDIA. So then that tells you that they're benefiting from the AI GPU super cycle. But I think the earnings call said client ramp. So there's a mismatch where they are delivering on a narrative, but not really executing. And I think that the burden of proof now shifts to Q3 when I think the market wanted it in Q2. So we need to see MI350 units really ship in volume. We need to see ROCm traction really take off among real customers, and any kind of meaningful signal that AMD's like closing that delta with NVIDIA, even though we've been saying they're not going to be NVIDIA. They just have to get a sub 10% share. And we just did not see what we wanted to see during this earnings report. And I do think they're going to probably get somewhat of a sell from near term because it ran up way too quickly. And I think the lack of visibility into MI350 adoption is beyond just what they're saying is going to be an issue in the next couple months until Q3.
And Shay, it's interesting just getting insight. You mentioned talking to CEO Lisa before the call. What is the when executives take calls with folks like yourself before their earnings call that close to it? Are they really just looking for feedback from people who are really following them of kind of understanding what the street wants to hear, or what's the purpose of those types of calls?
So it's I don't know, it's like a practice run before the
Uh,
real CC. I think first off, it was Daniel was the star of that show when Lisa talks. Well
she's a big
deserved. So
deal.
yeah,
Yeah, she's a big
she's a big
deal.
deal, and Daniel's
But
a very
nice
big deal as
nice to
well.
be in the room and on the Zoom though.
No, no,
That's pretty
totally,
cool.
so I think that they want to see like what it's like their good first test of what they think the reaction will be, because when you're a CEO, like you constantly think your company's delivering, like you're in it every single day, you're seeing
Mhm.
the numbers beat estimates, so there are a lot of times like they're frustrated like why the market's reacting the way it is when they're executing. So it's all a narrative is what drives the market. So narrative is a really difficult thing to predict when you're so
Right.
involved and you're blinded by that. So I think that's especially it's my first real cycle of seeing like these CEO pre-calls and like what they're asking and what like the response is really interesting, the psychology behind it. And also like knowing the information before the public does and seeing like I
Yeah.
think it's gonna go this way. We'll see if I'm right and type of thing. It's like gamifying it a bit. But
Yeah.
yeah, I mean Lisa's killing. She's like one of the best non-founder CEOs out
Yeah.
there. Like she just is operationally killing it on the CPU and gaming GPU space. And she has just a mountain to climb to try to catch up to NVIDIA on the AI accelerator market. And it's a little unfair. It's David versus Goliath, but
Mhm.
it's such a massive market that's going to continue growing at such a rapid pace that we at Futurum, like we've been saying, sub 10% shares up for grabs for AMD, and that alone will cause this to be a massive company.
Yeah. It's really interesting insight. And in that same sort of space, Supermicro also reporting their stocks down 15%. They missed earnings and revenue expectations, slashed their full year forecast by 7 billion. They have some supply delays, rising competition from Dell, HPE. So of course, Supermicro makes the computers that companies use to run things like AI and data centers. AMD's designing and selling the chips. Supermicro, this is the one that had a little bit of an accounting snafu. Is that right, guys? Am I making that up?
First, yeah, I mean the one that I'm blanking on the word, the big four law firm.
KPMG. Actually,
No, I think it
I
was
don't want to.
someone else, and so
Okay.
what? Their big auditor firm dropped them.
Right.
And I'm telling you guys from like anecdotal evidence, they it takes so much for them to drop a client because they care all about cash. They could care less about like they'll look the other way sometimes of like I'll get out of the room if you guys want to have this kind of conversation. Like I want the revenue still. I want the sales. So if they drop SMCI, there was something so over the top that crossed the line that was like my reputation, we can't
Yeah.
associate ourselves with this company. So that's part A of like something is fishy. Part B
Yeah.
is this is a commodity of a business. There's nothing special that's SMCI is doing anymore. They had a first mover advantage. That first mover advantage got eroded once HP and Dell got into the space. And those two companies offer services that SMCI doesn't have the luxury for because servers isn't just their end all be all. It's just a BU among the umbrella of other BUs that they do that they can leverage like customer service, all these like nice things to have in an ecosystem. But SMCI doesn't have the luxury to do that. And that's before all this like accounting fraud issue. And the way you can tell if a business is a commodity, track their gross margins. Just track it. That's where pricing power
Mm.
lives. And SMCI, the first mover advantage when they had it a couple years ago, was at 15, 16%, which is really good for a server business. What did they just report right now? 9.5, and it keeps trending lower. That's not a scalable business, and that does not provide the luxury of having any kind of earnings to reinvest in any kind of R&D or competing offerings that Dell and HPE does. And like they're just in a very tough position. I think they're purely used as an AI lever trade, and it's a rental. It's
Mm.
not a long-term investment anymore.
Let's talk about another stock that's down a bit today. And Tom, I'm sure you're getting a lot of data points on these guys. Open Door. So they're down 20%. They slashed their outlook. a lot of red flags they're waving about a weakening housing market. I think 500,000 more people are in the market to sell homes
So
than to buy them, which I think is like the worst it's ever been. And they're cutting some marketing spend, which obviously isn't great. So the CEO is sort of pledging to trudge on and pivot forward. But obviously these guys have been a sweetheart of the retail investor community. Tom, what's it looking like in the community today with Open Door?
yeah, I think this is kind of what we've been talking about on the show and with other media outlets for much of the last 3-4 weeks. There's momentum and what's happening with the stock, and then there's what's happening with the underlying business. And right now the rubber is kind of meeting the road, and we're seeing that the underlying business still has a lot of challenges. I think the other frustration is that management chose not to really address, retail investors who have piled into the stock over the last 3 weeks. Their conference call didn't really say much. They weren't on video; they were audio only. So
Mm.
they kind of, instead of leaning into it and crafting a narrative that was really compelling to keep shareholders on board and focused on the long term story, they did a mixed job. They kind of treated it as any other conference call, any other situation, when really, retail and those participating in this were looking for some sort of acknowledgement, some sort of, head nod from management that, hey, we see you, here's what we're building, stick around for the ride. And I just don't think they did that. So hopefully management uses this as a wake-up call and says, hey, we need to really embrace this, online retail community and create frequent touch points that give them updates on what's happening with the business, or else they're just going to go elsewhere. There's plenty of the other stocks in the sea, and a lot of other companies that are doing quite well from a fundamental perspective. So yeah, I think this same kind of story as SMCI. That's not a meme stock, but it's all about expectations. SMCI was up 9 weeks in a row ahead of earnings, so like, sure, we're giving back some of those gains here, but the point is a lot of these stocks have run up on high expectations. And if you're not crushing it this earnings season, your stock is getting punished. And I think Snapchat is another,
Mm.
classic example of that. I mean, it seems like every time that company reports earnings, it's down 20%
Yeah.
after the bell. So
Well,
yeah, it's all about earnings and expectations.
Snapchat's a freaking joke. First off,
Yes.
Andal Evidence. Like I used to work there for a hot minute. Uh,
What?
it's hot minute. I
Were you
think it
like
was
a
literally
filter model? What was the role? I assume corp
no.
dev.
It's corp dev, but Evan is he is treating this company as such a piggy bank for himself. And the way the voting structure works there is nobody can say boo hoo because he owns legit all the voting shares. And that means that a board of directors can't do any kind of pivot or initiatives to buck whatever he wants to do. Everyone gave them this to him at the IPO because they thought he was the next Zuckerberg. Look at the last 5 years of the stock price or all time. It's red. It's like down 30-40%, which is crazy because they have so much attention on that app, like especially in the younger demos, like Gen Z and Alpha, like they love that app. They just don't know how to monetize. Why don't they know how to monetize? He does not care. He knows that nobody can say boo-hoo to him. He can have this like hot product, doesn't have to care about any kind of return to shareholder value. And that's why you're seeing no activists participate in the stock ever, because what's the point? They know, like, even if they ruffle a few feathers, Evan has this final say of, I can do whatever I want. So I think for him, he's probably getting paid a very healthy SBC or some kind of salary. Doesn't have to do much to like focus on margin expansion and headaches of being a publicly traded CEO. And it's expensive shareholders. Like, I'm sorry, like you guys, can you imagine investing in Snapchat over Meta when you're bullish on social media apps? Like, it's the pain.
Yeah.
I can't imagine the pain they're feeling. And I know there's probably some people out there, and this is notoriously looks like an undervalued stock, but it's not because they don't have the right captain of the ship.
Yeah. I mean, they did announce increased user growth, I think, which always shocked. I'm not in the demo for Snapchat, but I'm like, who is? But it is a primary messaging app for a lot of young people. And you're right, it's almost like they were very early on some things that now are very commonplace. Like I think filters was kind of their thing at first in like 2016 with the dog filters, and they sort of innovated that, and then
Well,
didn't do much with that. And also wearables, they had spectacles that they came out with that just, that was early too.
totally. And also, like, I maybe forgetting, but I think they had like a top three. They revealed like who they interacted with the most, the top 3 or 4. That was
Uh,
such
the
a
streaks.
popular. Yeah, not the yeah, the streaks exactly. So like I
Yeah.
think when I was in college or high school, like it was huge because you saw who was talking to who. And like if
Yeah.
you were like intrigued or like you were like wanted to see some tea, like that revealed who this woman was talking to, which guy, and the
Yeah.
guy talking to the woman. It was like a cool social media feature, like top 8 on MySpace, but like I don't know, they just never
Is that gone
leveraged.
now? I feel
I don't have social media, so I think it's
okay.
way gone.
I
But
feel like I remember that like people getting into trouble about that, where it was like you kind of got found out. You needed to like make a separate account if you wanted to be shady. So maybe
totally.
they got rid of that feature over time. But I think, yeah, that is an interesting. It's a messaging app, but they're trying to sell ads. It's a weird kind of dynamic, but the product market fit with the demo they have is there. It's just a matter of how do you get money out of these crazy kids. Uh,
Mhm.
let's keep moving through other earnings. Unless Shy, do you have any thoughts on Open Door or not so much? I assume you didn't talk to their executive team before their call. They might have gotten some pointers from you.
Yeah, no, definitely not in the tech space. I mean,
Yeah.
open door, I don't track it too much. I'm not bullish in that space, but it's definitely the next meme stock. I think it's got a cult following. I see Carvana 2.0 all the time associated with it.
Okay.
I think it's a little different than Carvana because real estate it's a very different industry than cars. It's very heavy on the investment, but it's also people and housing. We all talk about this all the time. Housing is it's stuck right now. So
Yeah. Well, we also had we heard from Shopify today, or I think it was today, maybe yesterday, today. They're up 16%. They had stronger than expected growth. People like to watch this one because it's a good metric on the state of just SMB, how independent businesses are doing. Of course, they provide a platform with a bunch of services that allow you to set up an e-commerce shop and transact online if you're a little guy, but also they've been expanding. And so there's, Kith, I think, has a website on Shopify now. They have big brands on there as well. So they're sort of trying to diversify their mix, but people do look at this as a signal for sort of the state of SMB. And they called out specifically how their AI tools are helping their merchants build stores more quickly, create promos, track sales. So this was a positive, I think, just for the economic outlook amid the trade policy jitters. Uh, Tom, do you any insight on Shopify? They're one that do a very good job of connecting with their retail investors. They do the videos. Their president Harley is sort of the face. What are you seeing in the community around Shopify?
Yeah, I think generally this is a brand name people have stuck with throughout the dip. Maybe not the whole way up and whole way down, but as soon as it got some momentum back, people were hopping back on this. In terms of what people are looking for now, the 2022 highs near 175 or $30 above current prices. So, it's one of those catch up plays where if it hasn't yet eclipsed those highs and the fundamentals are still kind of supportive of momentum in the stock, that people are looking for those to play catch up and get back to those former highs. So, yeah, people like Shopify, and if you're bullish on small mid-sized businesses, e-commerce in general, this is a kind of best in breed.
well, I also want to call out uh Global E, ticker GLBE, is the white label service for Shopify's cross-border transactions. So if
Hmm.
Shopify is showing a really strong earnings, I anticipate this probably having a pretty green day. Not that green of a day. This might be an opportunity. Interesting. So I think that's interesting as a pre-read.
What do these guys do, Shay? They're the payments, cross-border payments?
No, it's more than that. It's like they solve the complexity chain of cross-border transactions. So it's currency exchange issues, taxes. It's everything that's a headache of Nike trying to sell in Africa, for example. And it was like, I don't want to deal with there's so many levels of complexity that you have to correlate just to go back to like what it is like domestically here. Global E solves that. So they're truly the picks and shovels play of a multi-trillion-dollar TAM. Issue is macro. You guys would be all living in terror wars right now. That's anchoring anything they do. But part B on why Shopify is catching such an reacceleration, like they guided a 26-27% growth next quarter. The street was estimating 22%. Why the massive jump? I've had a thesis entering this year. Shopify is a name you need to watch. SMBs are going to 10x, maybe even 100x. Due to all these AI tools. The productivity boom we're going to get is going to become me having potentially 5 SMBs, Katie having 10, Tom having 20, because all we have to do is a really great AI agent that does all the necessary stuff for us. And one agent can be 5 departments of a company. Where are they going to advertise their products? The SMB marketplace. What is that? It's Shopify. Shopify is going to catch a major bid from this SMB explosion due to the AI productivity boom. And I don't know if I have to listen to a conference call, still haven't gotten a chance. Maybe this is an inflective quarter where they're kind of seeing that ramp up. But I just think that they're in such a great position and something to definitely watch out for and see how they react today.
Yeah, let's take a quick break for a word from our amazing partners at Gemini. So guys, investing in Bitcoin has never been easier with the Gemini credit card. You can earn Bitcoin back on everyday purchases like gas, dining, groceries, even your $8 cup of coffee. And there's no annual fee. So you can sign up at gemini.com/CryptoTwits. That's gemini.com/CryptoTwits and earn a $200 Bitcoin bonus. Terms apply. And you can invest as you spend with the Gemini credit card. It is issued by WebBank. You see rates and fees for more details. Sign up today to earn that $200 intro Bitcoin bonus when you spend $3,000 in the first 90 days. Promotional terms do apply. Again, the credit card is issued by WebBank and you can see rates and fees. Check it out at gemini.com/CryptoTwits. Back to Shopify, I think, I'm curious to look more into that one. And it does, I want to get to some of the other earnings, but Shay, when you were talking, you remind me of some of what you're saying about just SaaS and the ability of some of these companies to move to sort of these agentic systems. Would you say they're one of those tools where you see them building out more agentic AI features that basically your thesis is it's empowering more people to start and scale small businesses, and that'll be a tailwind for them?
Yeah, they're going to survive the AI tsunami. So I think that they've created such an ecosystem in a marketplace that is going to be an agent cloud platform essentially. And I think that Daniel and I talk about this all the time, where we believe that being a SaaS company is like having really nice real estate in a bad neighborhood now, because you have bars up, all this stuff. And I think that the gentrification of SaaS is going to be a real thing of like, nobody wants to be associated with it. They want to like just have this new makeup on. And I think that there's only a handful of companies that will do that. I think Shopify will be one of those companies. And I think that I made the mistake of investing in Global E over Shopify because I was so bullish on cross-border transactions the past couple of years on e-commerce, when I should have just gone for Shopify. And I'm learning from the mistake. And I think Global E is still undervalued right now, but Shopify will be a major player going forward. So I'm just looking at Astera Labs right now. It's up 30%. So I'm just
Remind
like,
us
what's
what
happening?
those guys do.
They're my inference player.
Okay.
Remember, I keep talking about how inference is going to see a massive boom in the next right now for who knows how long. They are the toll booth for all the AI data. Essentially, they're solving that bottleneck that we're seeing right now in data centers. And everyone thinks Broadcom. It's justified. Broadcom should be. They're the Uncle Sam of inference. And the reason I say that is if AI is intelligence, inference is a tax on intelligence. So the more you use AI, the more money that goes in the pocket of the Broadcoms, the Marvells, Astera Labs. You can call them the toll booth if you want. And the way to think about Astera Labs versus Broadcom how they're kind of different is Astera Labs is purely AI. It's just all of the latest AI. All the hyperscalers use them. NVIDIA uses them for the NVLink Fusion. Like, and the way to think about the different toll booths is all the cars go to use Broadcom toll booth, every single type of car. The Ferraris, the sports cars, the aka AI, they're going to use Astera Labs primarily because the data latency speed is so much greater from point A to point B, and they're kind of perfectly positioned. But the issue with Astera Labs, in my opinion, is if NVIDIA ever decides to turn the faucet off and create a competing product, they're going to have a confident drop. Where a confident drop because OpenAI essentially is like, we're going to stop using you. We're going to commit to your open source and create our internal product that does essentially what your managed services does. That's the worry about the AI tsunami. I don't think it's going to happen to Astera Labs, but that's always the risk. But even right now, wow, it's a big move.
Is there a piece of news coming out, or is this just?
Oh, their earnings report was.
Oh,
yesterday.
their earnings.
Yeah.
Okay, that makes sense. Interesting stuff. Tom, I want to shift over to crypto. I know you have some views on Bitcoin, Ethereum, and traders sort of upping their selectivity. So curious if you could show those. We could pull those charts up on those two cryptos and talk through that trend.
Yeah, this is more broadly just going back to kind of the more selective environment that I've been talking about for the last couple of weeks. We're no longer in a place where everything at the index level and individual stock level is working. And I think, Bitcoin is probably the best proxy for risk assets right now. So we kind of broke out above 100K. Moved to 120, the mid 120s, and we were consolidating there for 2 or so weeks. And there was a lot of news that would have ordinarily sent prices higher, but instead we saw that consolidation break down. And so to me as a technician, that says, okay, the market's a bit overheated, needs some time to come in. Maybe it tests 100K again. That's where the 200-day moving average is and the previous, breakout area. So I think it's just kind of a risk off signal in general, not necessarily risk off, but more selectively taking on risk. And so we're seeing similar things in the equity markets. A lot of the major indexes are at logical levels to pause. And so, again, this is just what I've been talking about over the last few weeks. People, as we move into earnings season, are becoming more selective, are recognizing that we've had this record run and that it might be time to either take some profits, move your stops up, just kind of protect those gains because we're heading into the seasonally weak period over the next, 6, 8, 10 weeks. And so people are not taking as many risks as they once were. And I think Ethereum, Keith, if you could pull that chart, similar situation here, very logical level for things to pause. 3,900 to 4,100 or so has been resistance for much of the last 2 years. So again, I don't think there are any major surprises here. Ethereum was up close to 200% from its April lows. So if you're expecting it to just continue to move higher day after day without short-term corrections, either through price or time, I think you're making a low probability bet. So that's all we're seeing here is just some profit taking, people, moving some chips off the table, being more selective as we get into this kind of earnings season where, again, we're seeing your stock could either be up 30%, it could be down 30%. It all depends what the fundamentals say.
Yep, that's a theme we talked about yesterday with Jake of kind of bracing for whatever might come in August. Sticking on crypto for a bit, let's talk Galaxy Digital because I got a chance to speak to their CEO, Mike Novogratz, yesterday. That interview just dropped. So if you guys, after you're done watching us on X and on YouTube, you can check that interview out. I talked to him for about 15, 20 minutes. Really, I haven't seen a lot of interviews with him. What a interesting fellow. He at one point flipped off a crypto hating senator. You'll have to watch to see which one it was. You could probably guess. But they had a bit of an earnings miss yesterday. But one of the things we talked about was, what a different world companies like his are in July versus in Q2 proper when we're reflecting back on earnings. And so they actually are reporting their best July ever. That wasn't reflected in their readout. But they grew their crypto holdings by over 3.5 billion. He talked about they actually managed one of the biggest single crypto transactions. I think he said it was $9 billion recently. And they also have sort of two sides of their business. One is his background. He was at Goldman for a while. So he's trying to basically build the Goldman Sachs of the crypto world. So that could be managing assets, could be trading. But then they have this new business in the data center space. So they're acquiring real estate in Texas and other states where they're building up data centers. So definitely check that out. Interesting guy. He got into a lot of the regulatory landscape, and was very candid. So an entertaining listen. Guys, I don't know if you follow Galaxy closely, but even like, I know, Tom, we talk about these sort of Bitcoin treasuries. That came up in the conversation of just like the volume of people interested in working with them in that capacity. Are investors still attracted to these types of companies? Obviously, you have the OG Godfather micro strategy, now known as strategy. But is the appetite still there for these types of companies?
I would say selectively. If the company has a compelling story and more importantly, a compelling leader that is out there, kind of, you know, beating the drum and getting people excited, I think that's a unique value proposition. But I come back to the core, problem for these companies is that there are so many ways for investors to get access to Bitcoin specifically directly. So I think that's a challenge for those companies. What we're seeing now is a lot of them shift to Ethereum or altcoins, or just moving further down the scale where there aren't ETFs yet. So they're providing value in that sense. Where, like, hey, if I can't buy what's a good example? Solana ETF. If I buy a company that's investing in Solana, great. That's my exposure. So I think, like the Bitcoin treasury companies, they'll have their time in the sun, but then as the regulatory environment allows more of these spot ETFs to come out, it's going to get harder and harder to justify some of the premiums that these are trading at relative to the underlying underlying crypto that they own, if that makes sense.
Yeah. And it's interesting because from the investor point of view, to your point, being selective, but for someone like a Galaxy Digital they're sort of the go-to to actually make that happen at these companies, that's definitely an advantage for those guys.
Yeah.
Shy, let's shift over to, I'm like literally stalking your Twitter because this is where I get all the great ideas. What do you want to talk about? We got Rocket Lab, I know, had a launch. Uber. What's top of mind for you outside of what we've discussed already?
I mean, we could talk about DigitalOcean. I think we didn't talk
Ooh,
about that yesterday.
yeah.
DOCN. This is one name where I stuck my neck out, which is really like I'm not very on the aggressive side because I'm a long-term investor. This is one name where I've been positioning very hard in the past couple of months because it's just, we're seeing from the major cloud service providers just insane numbers on Azure, Google Cloud, AWS. Like, cloud computing is on fire. What does DigitalOcean do? They're the SMB for cloud computing. And I think that's, everyone views them as an AWS light type of company, like light, LITE, like just like a lighter version. But I see something far more than that. And what attracted me initially was how cheap they're valued at. They're trading at 10 times EBITDA multiple. So you guys know me. I'm a Palantir shareholder, CloudStrike, Rocket Lab, etc. Like, valuation is not usually the names I own. There's a premium side to it because it's all about moat. This one, they have a niche moat. I wouldn't even say moat. Moat might be a stretch. It's more of there's a valuation disconnect between what the market's viewing them as and what I'm viewing them as. I think that management has, in multiple calls in the past couple of months, have said that the 2027 guidance, they expect to have 20% growth, finish that year at 20% top line growth while maintaining 35% EBITDA margins. They're trading at 10 times EBITDA. If those estimates are a reality, which I think they are, especially when you guys hear me saying SMBs will explode, what are you going to have to do with your data? You need cloud computing that's more affordable, and that's going to be like a democratization of cloud computing. Like, the reason AMD is going to have such a boom from inference Inference might be the boom as well for DigitalOcean. You don't need the pricing of the Azures, the big three, when you're Joe Schmo who has their own SMB. So like, I think that was going to be a major tailwind for them. This earnings report they got 2 days ago was a banger. It was all beats across the board. They guided up, which they rarely ever do. They called out that the demand is far greater than supply, and they've invested in the Atlantic data center because of this demand issue that they have. It's like truly the AI cloud that nobody's ever heard of. And the move they had just yesterday, I think it was 30% move yesterday, and today,
Wow.
what's up 4% today. When you have a follow through day after going up 30%, that's huge, especially on the stock where it's been broken for years. I do think this is it's undergoing a re-rating now. And I do believe 25 to 30 times EBITDA multiple is justified if they actually have those 27 targets. They're going to reach that. And I do believe that we're seeing signs of the AI machine learning revenue is segment of their business is up 100% year over year. You're seeing, I forgot how many, like a ton of clients getting taken away from the hyperscalers to DigitalOcean. The only caveat though, net dollar retention is 99%. It's picking up, but you need to get that over 100%. That's been the one metric I think that's been anchoring the stock for a long time. If that continues the momentum above 100%, maybe even 105, I really think this is going to be an explosive move. But today it's getting re-rated. I love to see it green today because that's always whenever you have a gap up, whatever happens on day 2 is like validation. Is this move real, or is there some algo driven short squeeze, etc.? This feels very real.
With the net dollar retention, I think that's an interesting one. Just a sidebar, it's an important metric for SaaS, and for these guys, that's basically for an existing customer how much of their revenue over a period they're retaining. So they're losing a little bit of revenue per client. Does that factor in the fact that they might with these guys, if they're serving SMBs, is that due to just like people outgrowing what they're offering and they like need to level up? Or do you have any insight around how NDR works if it's, you're at a business that caters to one segment of the market, and then maybe naturally people just outgrow what you offer?
Yeah, I mean, NDR is like if you're over 100%, that just means like your existing customers are spending more. Great
Yeah.
sign. If it's under 100%, customers are leaving or spending less. Red
Yeah.
flag. They went from 97 to 99%. So like that's not a great metric. I think that management has made like Patty's done a great job. There's a new CEO. I forgot when he started, but he's done a great job where he's become developer focused. The previous CEO does not developer focus. So they were doing all the things to get the bottom line ROI, margin expansion, squeezing the previous CEO was a former CFO. And that's usually not a great combination if you're a developer focused company. So he was just doing all the things that you'd want to see in the P&L that angered the developers. So the developers like, there's private companies that do what DigitalOcean offers. I'm just gonna go to them because they're being annoying with what their new strategies initiatives are. So now they're been very vocal. We're going to be developer first. We're doing all these things. So that's why you're seeing NDR pick back up. But it takes a while. Like it's not just like a flip of a switch. Now developers love you again. So that's part A. Part B is he hired such a dream team around him. I think that people don't realize. I forgot who the CTO and the CPO, Chief Product Officer, Chief Tech Officer. He ran AI at AWS before. He was a VP of their AI department. So he knows what the king of compute operates. Before his time at AWS, where do you work? VP at NVIDIA. Stellar team. And they have a second exact, I'm blanking on where his background is, but it was like similar level as this CTO. So like he's hiring the talent around him. And you guys are seeing right now like how costly AI talent is. I know it's different for C-suite, but I just think that the market is pricing that 10 times EBITDA, which screams to me that there's just not going to be an AI player. I think that's just so violently offsides. Worst case scenario, a Cisco would acquire them and love to acquire them. Again, they have millions of developers that use them. Cloud compute, they have a cloud computing offering. Cisco's getting into cybersecurity, clearly the past year. Cybersecurity is adjacent to cloud. being a cloud provider. So like, I think like an HPE, a Cisco, like these companies would dream of acquiring DigitalOcean if they were willing to. So I think there's a high M&A floor assigned to them as well. But I think this is a $50+ stock. I've been very adamant, and I've been building this position. It's a top 8 position for me now.
Yeah. Interesting insight thinking about who the enablers of this wave of SMB will be. Tom, let's shift gears a bit because this is something we haven't talked about gold in a bit. We were all in the gold era. We were back in 1840 whatever a few weeks ago talking about gold, and we haven't. So let's check in on the state of gold miners and how investors are feeling about that pocket of the market these days.
Yeah, this is definitely not again on everyone's radar, but definitely seeing more activity on this week. The story here is gold over the last 4 months has done essentially nothing. It's gone sideways, while platinum, palladium, and silver have all run significantly. And those areas of the precious metals market are more of the risk on equivalent. So when you think about large cap US stocks and small cap stocks, small cap stocks are things you buy when you want to have a little more risk on, higher beta. And so we're seeing the same thing in the gold market. If you want to buy just beta exposure to precious metals, you buy gold. When you want to get risky and frisky, you buy palladium, you buy platinum, you buy silver. So we're seeing kind of as risk appetite in crypto and in equities starts to, pull in, we're seeing people flock back to gold as kind of that way to get precious metals exposure without, having as high of a beta. So people are looking for a fresh breakout in gold. Gold miners are kind of anticipating this. Here's the gold miner ETF GDX. It broke above kind of resistance near 49.51. Kind of consolidated above that over the last 3, 4, 5 weeks, and is now targeting its all-time highs again. So people are looking for fresh breakouts in gold miners. I think I was on a panel yesterday for the Money Show, and Jeff Hirsch, who does a lot of seasonality work, said that now through year end is a great time for gold miners seasonally. So there's a lot of tailwinds here. It's kind of under followed, under talked about. So to me, it's definitely interesting. I'm long some gold miners here and looking for those kind of all time highs set in 2011.
Gold mining. It's all these pushes back out west. You got the data centers, you got the mining taking place. It's all happening. We have actually some exciting news to share from Stocktwits. We actually just announced a partnership with FinTech TV, which means you'll be seeing some of us reporting live from the NYSE floor. Very, very cool. Tom and I were there last week checking out the desk. It's super official. But essentially what we're doing is we're kind of bringing Stocktwits real-time data and community retail investor insights into FinTech TV's broadcast coverage. And we're launching a new show, I believe next week, called Treasuries Unchained, where we're going to unpack all of these Bitcoin and crypto treasury strategies. Tom, what do these types of partnerships, I guess, signal for kind of where Stocktwits is headed, and what are you most looking forward to about this new partnership?
Yeah, this is just a continuation of the last 18 months, us, really expanding beyond social media and being a larger media brand in the space. And I think having kind of retail trader representation on the New York Stock Exchange is kind of a great way to describe the current moment. Retail has kind of joined the market in waves over the last 5 years. They're here to stay, and now we're looking forward to this partnership to bring more insights and bring their voice to the institution that is the New York Stock Exchange. So I'm super excited. I know you are as well. Going to be a lot of great content coming from down there, and it's great to meet their team and excited to kick this off in the next couple weeks here.
Yeah, I want to get a blue jacket. And relatedly, I think we also announced yesterday the Gateway Group has this huge investor conference every year. Hundreds of companies there, a lot of growth companies, executives. Traditionally, there's a lot of analysts, institutional investors. This year, we're actually going to do the show Daily Rip Live from the conference and bring you guys interviews. So we're just weaseling our way wherever we can get to bring you guys the insights that the bigger guys are getting. So we're excited about that as well, and that's coming in September. So keep watching us. We'll keep bringing you the insights from the ground floor, and of course, keep engaging with us in the platform on X. And with that, I think we're at time. So we will see you guys bright and early tomorrow, 9 a.m. Eastern. We have a special guest coming. Joby Aviation's chairman is joining us. So they have some big news this week, and he's going to talk about that. So tune in 9 a.m. tomorrow. Tom, thank you as always. Wednesdays with Tom and Shay. Great insights today, and we'll see all of you guys back here tomorrow bright and early.
Thanks all.